Hello and welcome. You have tuned into Closing Trades right here on ET Now. I'm Srishti Sharma and with me as always is Snehi Shah. And Snehi, yes, of course, we are seeing a bit of a decline on the benchmark indices, but we can't complain much given the fact that there is a lot of sector churning that is still underway. And if we look at the breadth of the market, and especially in terms of the advance and decline ratio, that's also not that too bad. But when it comes to the benchmarks, yes, of course, the pressure continues. But the good part is that Nifty is still holding above that 24,500 mark. But more pressure on the banking index with 380 points of decline is what we are seeing. But yes, of course, a lot of these sectors that are buzzing, it's the auto and the IT pack that today is doing well. Just a while back, we also had the numbers coming in from Hindalco. The numbers seems out to be good and the stock is also seeing a good jump up because today the company did had a bit of a, rather the stock price did had a bit of a nervous opening for itself on the back of the Novelis print as well. But along with that, some of these stocks like Astral, that counter has been lagging behind since the start of the day. Along with that, Praj Industry, no significant recovery from the day's lowest point as well. So yes, of course, the earnings are definitely the key to watch out for in today's trading session. And let's put the spotlight on Hindalco. The company did come out with its numbers. We have seen an improvement in the margins as well, but how are the other internals looking like? Firstly, let's go across to Ashesha to know the fine print. Ashesha.
Well, yes, Hindalco has reported better than expected set of numbers. It's better than what the consensus estimate was. Revenue has seen a decline of a marginal 3.5% on a sequential basis, but margins have expanded by about 100 basis points. Margins have come in at 12.9% versus 11.9% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, aluminium upstream quarterly EBITDA has risen by about 17% YOY. We have EBITDA per ton for aluminium upstream business that has risen by about 15% on a year-on-year basis. Copper EBITDA has also come in largely in line with what the street was working with. Now, as you mentioned, Novelis, that one reported its numbers yesterday, and Novelis contributes nearly 60 to 70% of the total revenue, and that chunk was already reported, so we will not see any kind of reaction basis the standalone numbers, but yes, largely better than what the street was working with.
Okay, so better than what the street was working with is the outcome on Hindalco. Ashesha, thanks so much for that. Let's get a better sense on what to make of these numbers. We have Aditya Velekar, Senior Research Analyst of Metals and Power from Axis Securities, joining us on the phone line. Aditya, hi, good afternoon and thanks for your time. Right off the bat, what are Hindalco's numbers looking like? My colleague Ashesha was flagging off. It seems like a good set of numbers, and margin expansion of about 100 bips is what we've seen. What's your first take here?
Yeah, good afternoon. Yeah, definitely the numbers have numbers are better than what we were expecting. Both the upstream aluminium and the downstream aluminium EBITDA per ton, those have stood resilient. One point which we can see is that the net debt has declined quarter on quarter by 3%, and net debt to EBITDA is at 1.02 versus 1.0x in the previous quarter. So that is also slightly reassuring because in yesterday's post Novelis results, the net debt at Novelis has peaked at 3.2x. So the strength at the Indian operations is basically offsetting the weakness at Novelis.
So the strength in India is actually offsetting the kind of underperformance we are seeing in the Novelis business. Hi Aditya, but what exactly in the management commentary will you be looking forward to when it comes to the earnings con call?
Yeah, so today's focus will be on the upstream aluminium and copper segment, how they give the progress on their expansion projects with respect to their smelter, both copper smelter and aluminium smelter, and the 850 KTPA alumina refinery. So also the cost of aluminium production in Q2 and backward coal integration with respect to coal mines. These will be the key monitorables from today's call.
Okay, so all eyes are going to be on the management commentary when it comes to the con call. Aditya, we've spoken about aluminium upstream quarterly EBITDA. Let's talk about the copper EBITDA as well. It seems like it's in line with the guidance that the company had given at 673 crores, but it's still down almost 16.5% on a year-on-year basis. What are you making of this metric?
Yeah, on copper segment, they have consistently guided at EBITDA of rupees 600 crores per quarter. The decline on a year-on-year basis might be due to the fall in the TCRC, because TCRC on a spot basis have come down significantly. But Hindalco has a strong downstream portfolio with respect to copper, so that is offsetting that. Also, they have long-term contracts with respect to TCRC. So that is protecting their downside. And if you see on a sequential basis, the division has done well by 10%. The EBITDA is up. So going forward, we have to see how much they guide, whether the decline in the TCRC on a spot market impacts their guidance going forward. So that will be one of the key monitorables.
Aditya, we'll watch out for that. But thank you so much for taking the time out and helping us with your first take when it comes to Hindalco's earnings. So seems like a better set, and it's the India business that has outperformed the performance that we have already seen in Novolis. But for now, the stock is holding on with a cuts of 0.6%. But with this, let's move on and let's talk markets then with two of our special guests joining us on the show. Let me welcome Devin Choksi as well as Sharan Lilane also joining us from the studios. A very good afternoon, gentlemen, and thank you so much for your time. And Devin, firstly, what's the sentiment that you are finding for the markets right now, given the fact that we are in that topsy-turvy ride for the markets, one day up, the other day down, and is the earnings that is definitely making a big impact. What's your sense on the markets right now?
Yes, good afternoon. As expected, I think with the earnings season, we are experiencing the portfolio shuffling happening at every investor level. Largely, I think the mutual fund players have been actually shuffling their portfolios significantly. We have been observing that those companies which are quoting at significantly high valuations, they are basically finding reason to exit them because of the growth rate which is not matching those valuations. So I think some of the mid-cap companies particularly and the small caps also equally included, I think they have been probably, I think, shifting out from those and taking the gains into the pocket. At the same time, I think buying some of the underperforming companies into the portfolio with a target appreciation going forward. So it's a complete shift which we are experiencing at this point of time. That's why probably I think the market is remaining volatile. In my viewpoint, I think though the fundamental prospects of the business remain absolutely convincing, maybe the growth rate is not as encouraging as the valuations currently putting at in most of the cases. And that's where you are seeing the disappointment in the stock price. So maybe I think the market needs to adjust itself on the valuation premium that it has given to various stocks.
Right, okay, so that's the take on the market. Sharan, what's your take on about the Nifty on the charts right now? Because anytime we see an upswing coming in, we're not able to hold on to that the very next day. Is it just profit booking at play, or are there some patterns or some underlying trends that you could spot better for us on the technicals?
So good afternoon, Snehi. Good afternoon, Shrishti. If you see the Nifty, I think it had a very good start in the morning. I think once we were speaking in the morning, I said 24,700 looks good on the chart, and I think it just touched that level, and post that it has just been correcting. From the high now, Nifty has lost around 200 odd points. But one thing is there, the volumes in the last 4 days have been on a reducing trend. So Thursday had very high volumes, then Friday had lower volumes, Monday again lower than Friday, now again Tuesday volumes are again lower than Monday also. So this shows that the market is waiting for some sign, and I think looking at the global news, I think they are waiting for 15th of August. So again, I think it's a wait and watch. One positive day followed by one selling, again followed by one positive day. So now in terms of resistance, I think 24,700 is a good resistance. It has been rejected, I think 2, 3, 4 days now on that from that level. And in terms of support, 24,350 is a good support. Bank Nifty is more or less near its support area of 55,000 odd levels. I think if it breaks that, because of any news, I think the next support comes in around 54,500. So Bank Nifty is slightly weaker than Nifty, and I think going ahead also it will underperform. Today also, if you see, the leaders are actually the largest loser, HDFC, ICICI. again the largest point contributor towards the downside. So in terms of support, 54,500, if that breaks, you can quickly see 54,500 levels coming on the bank nifty.
All right, so those are the levels to watch out for when it comes to Nifty as well as the banking index. But Devane, what do you make of the IT space right now? Because yes, that has been a big laggard in the markets of late, but a bit of a jump up in today's trading session is what we are seeing. What do you make out of it? Is it just a dead cat bounce, or do you believe that given the underperformance and the suppressed valuation, it is really a case where one can relook at the IT stocks?
So I think the understanding is that I think the higher valuations where the profit is booked and the amounts realized, I think is now getting into some of the safer valuations. Probably, I think some of the case IT companies as well. Even though the fundamental shift has not yet happened, in which I think they started receiving larger part of the orders, etc. Given the kind of turbulence that we are experiencing at the US end, I believe that I think still the approach is that buy some of the good quality companies which have got the visibility of order executions that they already secured in past, and that part I think is possibly driving these companies I think buying interest into the portfolios. I don't think that many things have fundamentally shifted or changed at this point of time. Maybe I think the expectations are running high that some of the good quality IT companies would probably bring in the larger orders, and that would probably create higher amount of business visibility going forward in the next 3-4 quarters. So maybe I think too much of an importance at this point of time to be given also to the technical aspects of the price chart of many IT companies that people find at lower levels buying interest emerging into the stocks.
Okay, that's the take on some of these IT stocks and the IT counter overall. But on that note, we'll step into a very short break and interact with more guests on the other side and track the last couple of minutes, or rather more than couple of minutes of trade left when we return. Hi there, welcome back to Closing Trades. Lots to talk about. Let's get a little stock specific and throw the spotlight on IHCL or Indian Hotels. The Tata Group backed Indian Hotels is in focus today after the hospitality major has acquired around 51% equity stake each in A&K Hotels and Pride Hospitality, and the total amount for both of these deals comes up to 204 crore rupees. Now remember, both these companies operate under the Clark's Hotels and Resorts brand, which has a combined portfolio of 135 hotels in India, but not all of them are very active. In fact, A&K Hospitality also has presence in Sri Lanka, and this could be IHCL's way to expand their presence in Sri Lanka further. So that is the reason why this stock is in focus today. ET now caught up with Mr. Puneet Chhatwal, the MD and CEO of IHCL, to understand the rationale behind this acquisition and the way forward for the hospitality sector. Let's go across and listen in.
Qmin has had a very good evolution. What started as a home delivery service at the peak of COVID found its home as a QSR complementing the Ginger brand, which sits within our company in Roots Corporation. So one being a root spice and other being the root vegetable. It just seems like, everything just fell in place in the same family. I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it. Our strategy for international is very much limited to the Taj brand in key gateway locations and markets, and the rest of the focus remains pan-India.
All right, so that was the management of IHCL. But yes, back to the markets then. And as of now, Nifty Bank and Nifty 50 continue to reel under pressure. It's just the auto space that is seen to be holding up quite well. Along with that, select metal and IT counters add to that list. But with this, let me also welcome Shivangi Sharda on the show right now. Hi Shivangi, afternoon. Good to be speaking with you. Firstly, help us with your sector picks rather, because yes, the weakness continues on the benchmark indices. But any sector that is looking good to you right now?
Very good afternoon, Shrishti and Sneh. Thank you for having me. So we've seen that, of course, the markets have reacted well. Good support-based buying can be seen, and buying in particular sectors, even though follow-up is slightly on the shallow side. But we've seen good momentum in the aviation stocks. So on my radar is Indigo, which is looking quite positive from this one. Apart from this, some of the consumption name stocks have also picked up. Of course, travel and tourism pack has been one of the most desired stock right now ahead of the long weekends and festivities coming in as well. Talking of festivities, of course, we have to look at gold-related counters as well. So Titan is also next on my radar. So these are the few sectors that we could focus on. Apart from this, some of the PSU banking names are also looking quite positive.
Okay, so that's where the conviction lies for Shivangi. Devin, coming to you, let's talk about some sectors that are managing to hold on to the green in today's trade. While the market is quite even Steven on either side, you still have pockets of pharma, auto, IT, select energy and metal stocks also that are doing well. Amongst these, let's say amongst the pharma, what are you liking at this point, given that there is still uncertainty on the tariff front for pharma? But barring that, what sub pockets are you liking from this space? Devian, I believe you'll have to unmute yourself, please.
I think it is already unmuted.
No problem,
already.
please go on.
Yeah, I believe that the contract research manufacturing and the API business within pharma, they continue to have the order books for execution. And that's where probably I think their alignment with the B2B players, the patented drug companies in the case, I think in Western world, probably I think they'll continue to align themselves for execution. In my viewpoint, I think they remain relatively safe as far as I think the entire volatility aspect is concerned on the tariff front. Similarly, I think many companies which are into the complex generics and specialty generics products, they remain relatively safe in this environment as well, because I think compared to the patented product, their products are at a discounted price. So even if I think there is some kind of a margin because the tariff impact has to happen, probably I think the market would be in a position to absorb that. Unfortunately, I think the consumer in US would probably get hurt more, and so would be the situation with the pharma, the health insurance companies in particular. I believe that I think they would be slightly on a receiving side if this particular tariff I think goes and the prices shoot up, which consumer will get the offset or the compensation from the insurance company eventually because of the insurance coverage. So in my viewpoint, I think this is not likely to survive for a longer period of time. Maybe some resolution will happen sooner than later as far as the pharma tariff is concerned, which is a threat at this point of time.
All right, so that's the take coming in on the pharma space. But yes, of course, today select pharma counters are doing well, case in point being Alchem, Granules, etc. But with this, Devin, we would let you go. Thank you so much for taking the time out and speaking with us. But back to the markets then, and yes, of course, since select pharma counters are doing well, Shivangi, what do you specifically make out of two counters in particular? First is Alchem, very good set of numbers coming in, and the other one is Granules, though not a impressive set, but the commentary on their Gagilapur plant is actually good, where they're saying that the remediation process is and is witnessing a good progress over there, which is still under that US FDA scanner. What's your take on both of these pharma majors?
So, talking about these pharma stocks, both of them are actually bottoming out on the weekly basis, and very similar structure per se, but the momentum is slightly more in Alchem. Of course, it's attempting to trade above its key exponential moving average, and we might see some bit of follow up here. But again, it has to hold above 49.50. If it continues to hold above the same, only then we could see momentum towards 5,050 levels. So this will be important to watch out for this one. But of course, the upside still remains a little questionable because of the momentum that has fizzled out in the last 9 odd weeks.
Take on some of these pharma majors on the charts, but time now to get in some BTST ideas from our experts. And Sharan, you go first. Given the way the market has once again turned around slightly today, any STBT idea perhaps? Because yesterday you gave us two long ideas. Does that trend continue?
So, Sneh, I think the market has not made a new low. So for me, I think there's a very high chance that it will reverse tomorrow, even at the, I think by the closing. So again, both of my calls are BTST and both very good stocks. So you can actually go long on them. First one is DMart, is looking very good on the charts, trading above all its moving averages. Fundamentally, also a lot of good news is coming on this counter. So go long DMart with a stop loss of 4,200, target of 4,300 to 4,350. My second pick again from the auto space looking very good. I mentioned in the morning also, but again I'm mentioning it. Hero Moto, it's looking very good. It's just getting ready for a big breakout. So again, go long Hero Moto, BTST good trade. Stop loss 4,590. Target should be 4,690 and 4,740.
All right, so those are the two calls and two buy calls rather coming in from Sharan. Let's watch out for that. But Shivangi, what about you? What are your calls?
So first up, ahead of the long weekends that we're seeing on my radar would be something from travel and tourism pack, which is Indigo. This one is looking quite positive because of the short covering move that we've seen in yesterday's session with a follow-up long build-up today as well. So quite positive. And we've seen that this one actually has been an outperformer from the last many years. And even on month-on-month basis, it's respecting its upward sloping channel. So recommending a buy on Indigo. This one, of course, is looking quite positive. And the next targets that we're looking at is around about 16,800 levels.
To have Shivangi on a patchy line, we'll try and fix that line. But as we slip into a short break, hear out from the management of Praj Industries, because after a challenging quarter for them, we had the MD, Mr. Ashish Gaikwad, who joined us earlier, and he says that they remain cautiously optimistic about the future. As we slip into a very short break, here's what he had to say.
It is a challenging time right now when it comes to the quarter's results. There are two main reasons, I would say. The first one is, of course, we know that the EBP 20 program, which is 20% blending of ethanol into gasoline or petrol, has been very successful and it has been completed way ahead of the schedule. The second part, as you rightly mentioned, is about not just the tariffs, but the uncertainty in tariffs, which is weighing more. I would like to mention a few points why we are still cautiously optimistic about it. First of all, we believe that there are discussions already in the play when it comes to additional blending mandates for ethanol, and that will certainly give an impetus. The other vector that will play on ethanol market and its more capacity addition will be the flex fuel vehicles and their introduction in the Indian market.
Welcome back to Closing Trades right here on ET Now. Just a few minutes left for the market to shut shop, or rather, to be precise, 20 minutes for the trading window to go by. But with this, let me welcome Nikhil Ranka, who is the CIO of Equity Alternatives at Nuvama Asset Management, joining us on the show. Nikhil, hi, afternoon, and good to be speaking with you. And Nikhil, like the same question, because yes, the index is one day up, the other day down, and a lot of the sector churning that is underway, and that's one of the clear trends that we are picking up. The earnings that are disappointing, they are getting hammered in a big way, while in some of the other sectors which were beaten down, case in point being autos, ITs, they are trying to make a comeback. What's your reading on the markets right now?
So good afternoon and thanks for having me on the show. So broadly, 1 month back when we were on the show, we were a bit cautious on the markets from 25,600, 25,700 levels. And at that point of time, we clearly highlighted that, the best case for markets is time consolidation here, because the incremental upside based on an FY27 valuation was looking more like 26,200 to be the fair value of Nifty. We've corrected almost 1,000 points from those levels. And the good point is, now we at least have closer to 8-9% upside on our fair value of 26,200. And if we look at individual sectors, in case of IT specifically, if you look at it, most large cap names are now down to less than 20 times FY27 earnings. And these are the levels that they had hit when the tariff uncertainty was at their peak. So incremental downside from these levels seems limited in IT names. Similarly, if you look at the banking sector, the street has now very well built in that Q2 again will have 10 to 15 bips NIM decline because Q1 had 10-12 bips. And if you hear the commentary of most of the large banks, what they have said is the first rate cut has been completely passed on, and the second rate cut of 20 bips will get passed on in Q2. So there will be further NIM impact. And so Q2 also should be a soft quarter from an earnings standpoint. But Q3 onwards, we expect earnings to pick up and markets also should start trending higher from these levels is our view. Incrementally, we don't see downside in markets below 24,200 levels in that sense.
Okay, so that's the take on that. But let's move away from that. And in fact, let's focus on select auto stocks that are doing very well today. Shivangi, want your sense on some of these stocks on the charts. Case in point being Maruti, Hero Moto. Both of them are seeing gains of about 2% in today's trade. And M&M is also not too far behind. What are some of these stocks shaping up to be like on the charts? And where are you liking or where are you seeing value on the charts at least when it comes to the auto space?
Talking about the auto space, shifting gears can be seen in Hero MotoCorp. We've seen that this one has consolidated from a long time on the weekly basis. And we've seen the nature of the stock is to rest after a breakout, which has happened earlier this week. And we've seen a good pullback from the retracement levels as well. So now, again, attempting to, soar higher. So this one is definitely on radar. And in fact, the two-wheeler space is looking quite positive among the entire auto pack. So this one should definitely do good. 48.50 is the next targets that we're looking at for Hero MotoCorp with a support of 45.70 levels.
All right, so that's the take coming in on the auto counters. And yes, Hero MotoCorp remains to be the consensus buy from both of our experts then. But along with that, as India gears up for the festive season, optimism is running high across the key sectors. In hospitality, demand continues to outpace the supply, keeping the momentum strong for players like Indian Hotels. The auto industry, backed by a bumper harvest and the recent repo rate cut, is eyeing robust sales, with FADA expecting a record-breaking festive run. And in the EV space, Group Shaman Cars sees infra upgrades, innovation and rising disposable income accelerating the adoption. From travel to transport, the festive cheer looks set to charge India's growth engines. Let's go across and listen in.
I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it.
The upcoming festival season, yes, we are quite optimistic, especially with the bumper harvest which we are expecting post the monsoon. We all are hopeful as far as the auto industry is concerned that this is going to be a bumper festival season for us.
There is an uptake in the EV space. Whatever the products are on offer are getting lapped up. Maruti you mentioned, but I think it's driven more by the Mahindra and Tatas in that segment, and the adaptation is increasing. Earlier there was a little bit of anxiety on the EV sector, which currently I'm seeing that it's reducing. I think it should be a larger number percentage growth in that EV segment certainly.
Okay, so that's the word coming in from a lot of these automakers as well as Puneet Chatwal of IHCL, trying to gauge where this entire festive demand, the upcoming wedding season, could pan out for our economy. But Nikhil, on that note, what kind of push do you think this upcoming festive season, the wedding season, and of course this very near term, this long weekend that we have coming in, what kind of push do you think it could give to quick commerce, to hospitality, to travel and tourism? Where are you thinking, or rather, where are you seeing all of these sectors headed on the back of now good festive period coming up?
So on the aviation side, if you look at it, Q2 typically is one of the softest quarters. Yeah, historically, if you would have seen, there's a significant yield decline quarter on quarter in Q2 as compared to Q1. So on that basis, I think Indigo should have a softer Q2 numbers. The only good part is there's a meeting between Mr. Trump and Putin on the 15th of August, and if some sort of solution comes out, then obviously the uncertainty of disruption or sanctions on Russia goes away. And to that extent, if crude prices collapse from these levels, $4-5, that should be a benefit for some of the aviation guys. On the two-wheeler side, if you look at it, broadly what we have been seeing is single-digit volume growth for the last 2-3 years for most of these guys. And given the trends that we are seeing, I think we should still continue to be in single digits for most of the two-wheeler names in terms of volume growth for FY26. However, we do expect that there will be some margin expansion because steel prices have cooled off a bit in that sense for two-wheeler players. And stocks have also corrected in that sense from their peak valuations. On an FY27 basis, for example, Hero is now trading closer to 17-18 times. Bajaj Auto will be closer to 22 times. So I think there is another 10-15% upside that could come in these names. But beyond that, it will be difficult to build in given that we are still expecting single-digit volume growth for most of the two-wheeler names in FY26.
Okay, so that's the take on that. Just want to mark where the markets are right now. 24,487 on the Nifty. We've slipped below that 24,500 mark as well. A similar cut coming in on Sensex, close to a 0.5% cut is what we're seeing. India VIX once again slightly in the green, so that spike up has begun for India VIX. We have about 10 minutes of trade left. So let's see where India VIX closes today at the end of trade. Nifty Bank, in fact, taking a deeper cut right now, an 0.8% cut. You have Nifty mid cap also in the red, small cap absolutely flat right now. So that's the state of the market. Sharan, still optimistic on the positive open tomorrow now that we are below 24,500.
See, Sneha, as I mentioned, I think India is waiting for some kind of global news, and that's 2 days far away, I think on 15th of August. So you can expect some kind of pullback. Again, it's not that bad. We have already discounted 50% kind of tariff, and any news that will come from this meeting, I think will be on the positive side rather than the negative. So expect some kind of positive pullback. Yes, today you have seen witnessing some kind of selling, but one positive is the volumes are on the lower side, so the selling is not that strong. So volumes are even lower than yesterday's whole day volume. So again, expect some kind of pullback to the 24,600 odd mark. I don't know which sectors will lead that, but looking at the auto sector and even the PSU banks, I think you can expect some kind of recovery. Again, HDFC, ICICI, one of the biggest point contributors towards the downside. So expect some kind of recovery on those stocks. So for me, 24,700 is the level to watch. I think if Nifty starts moving above that, you can expect a good short covering rally to 25,000 odd levels.
All right, so that's the take coming in on the markets right now and the likely open for tomorrow. But Shivangi, before we shut show, one of the other counters that is heading for a weak closing rather, it's actually Bajaj Finance. Of late, we have seen a couple of these downgrades coming in from foreign brokerages on Bajaj Finance. Almost a 3% cut in today's trading session. A little surprising, but what are the charts telling you?
Bajaj Finance, the charts are telling me that, they has broken an important support level, and we've seen that, this stock has kind of added up on the call writer side. It's trading below its key important levels as well, and a consolidation of the last trend trading session was seen, of which the lower band has been breached. So some more pain point can be seen in this one before it again recoups for another fresh leg of rally, but would be a wait and watch here for this one.
All right, so that's the take coming in on Bajaj Finance. See, in the last 1 month, the stock is down over 8%. But along with that and some of the upcoming earnings, all eyes will be on Apollo Hospitals as well. And this time around, we are expecting a good set rather, because when it comes to the segmental performance, both from the hospital and the pharmacy business, we are expecting a double-digit growth over there. While in terms of the profit, that's expected to see a jump of 29% on a YY basis, but just absolutely flat growth on a sequential basis. But well, of course, on to the management commentary. All eyes will be on how do they see the margin expansion in their pharmacy business rather, and specifically the online pharmacy side. What is that doing? And the commentary with respect to the ongoing capex and the upcoming capex as well is something that we will be watching out for. So good set rather expected from Apollo Hospitals. But Nikhil, just wanted to have your take on the hospital pack, because amidst this lot of uncertain times with respect to tariffs, slower growth prospects, hospitals as a space is a more domestically oriented, and along with that the management commentary so far from the other companies is quite good. Do you believe that Apollo Hospitals is the place to be, or rather is one of the preferred bets right now in the market?
So hospitals clearly has benefited from the shift to the unorganized to the organized sector in that sense. So as we have seen the penetration of medical insurance increasing, incrementally people prefer to go to multi-specialty hospitals, and because of which what we have seen steadily is not only have occupancy levels inched up for most of the hospital players, but we have seen high single digits steady uptick in the ARPOB as well, which is the operating revenue per bed in that sense. Because of which, we have seen hospital stocks consistently compounding their operating profits at between 15 to 20%. In the case of Apollo specifically, they have decent expansion targets, and also they want to list the 24/7 venture separately, which should lead to some sort of value unlocking for Apollo Hospitals. And the stock is not very richly valued, closer to 22 times CV EBITDA multiples.
Okay, I believe we'll just repatch that line and wait for his take on that. But let's shift focus from equities to macros. And as the street awaits inflation data numbers to be released at about 4 p.m. today, in a short while from now, let's take it across to my colleague Varun to understand what the polls are indicating on the same for CPI and core CPI too. Varun.
Well, so the Reuters polls actually expects the CPI number to come at around 1.76%, and this would be the 9th straight month where we are seeing a decline in the CPI number, and in fact a 6th straight month where we are seeing the CPI number below the overall tolerance level of RBI, that is around 4%. And this time the CPI numbers are expected to fall below the 2% mark, that is around 1.76%. If you look at the overall numbers, it is the food inflation that is going to impact the overall CPI number, because it's the vegetable inflation which is on a declining trend, and that would impact the overall CPI number. Also, if you look at the rural and urban CPI number, they have been on a declining trend, and we are expecting them to decline in this month also, that is in the month of July as well, and that will impact the overall CPI numbers for the month of July. Also, if you look at the core CPI number, they are expected to moderate to around 4.22% in the month of July. So overall, if you look, the CPI numbers are expected to decline for a 9th straight month, and they are expected to come at around 8 years low, that is around 1.76%.
All right, thank you so much, Varun, for getting us all those details. So once again, a cool off in the inflation print is what we are expecting this time around. So let's watch out for that. But along with that, with respect to the CPI numbers as well, we also had a word with Sonal Verma, Managing Director and Chief Economist, India and Asia ex-Japan of Nomura, to discuss how they expect both the retail and the core inflation to shape up for India in the month of July.
headline CPI, we're expecting a moderation to 1.3% from 2.1%. So actually going below the RBI's 2 to 6% tolerance band. And we think it'll be driven by a combination of both food inflation getting into a deeper deflationary territory, plus a moderation in core inflation. So core, if you recall, had popped up to 4.5% in June. That was partly because of the impact of gold prices, some of which has reversed. So we are also expecting core inflation to moderate to 4% from 4.5%. While tariffs are, inflationary in the US, they are actually disinflationary in rest of the world, including in India. Partly because of this tariff impact and what it does to China's overcapacity and some of that hitting other shores. So it is important, but I think for India, we think disinflation is going to be the big theme.
Okay, that's the word coming in from Nomura in terms of what to expect from the CPI this time around. Shivangi, before we let you go, as we start winding down for the day, just a very quick take on what levels we can see at open tomorrow. Okay, we've lost that line with Shivangi. Let's just start winding down for the day. And I believe my colleague Ashesha is with us to take us through how the trading day has panned out to be like today. Ashesha, over to you.
Well, yes, we only trended lower in the second half of today's trade. Nifty is ending with some amount of losses, 100 points down for Nifty 50 to end near that 24,480 mark. Nifty banking index, that one in fact was underperforming in trade today. That one should also come up for you on your screens. Nifty mid-cap, Nifty small and mid-cap index, the broader markets were also under pressure today. Nifty bank was down nearly 450 points. In fact, it is ending below that 55,100 mark. Nifty mid-cap index down 0.3% as we speak. Nifty banking index down 0.8% in trade. In terms of individual losers, we had Bajaj Finance. That one is ending with a downtick of nearly 3%. This is the biggest loser on the Nifty 50 index, followed by Trent and HUL. These were also some of the other laggards, ending the day with a downtick of 1 to 1.5% in trade. That's Trent for you, HUL 2484, ending the day with a downtick of 1.4%. In terms of individual gainers, we had Maruti Suzuki, which is up nearly 2%. The biggest gainer on the Nifty 50 index, that's one for you, 1284, 841 is where it is ending for the day. Tech Mahindra and M&M were also some of the other gainers from the Nifty 50 pack. In terms of individual sectors, we had Pharma Index, which was bucking the trend. In fact, it was the biggest sectoral gainer in trade today. Alchem Laboratories is ending the day with an uptick of a solid 6% after it reported very strong set of numbers, 6.5% higher for Alchem Laboratories. Biocon was up 4%. Granules India is also ending the day with an uptick of nearly 3% in trade. On the losing side, though, real estate stocks were under pressure today. In fact, Nifty Realty Index should also come up for you on your screens. That one is ending the day with a downtick of nearly 0.5%. Nifty Realty Index 0.8% shaved off on that counter. Godrej Properties, Prestige Estates, DLF, all of these stocks lost anywhere between 1 to 2% in trade. Godrej Properties down 2.2%. DLF and some other real estate stocks were also under pressure today. In terms of individual stocks, let's put the spotlight on Alchem Laboratories, and as I mentioned, it reported very strong set of numbers. Revenue up 11%, profit after tax saw an uptick of nearly 22%, and margins also expanded to come in at about 21.9% versus 20.1%, 6.5% higher for this counter. Granules, again very strong set. Revenue saw an uptick of 3%. Granules India is also ending the day with an uptick of 3%. Both of these stocks are the biggest gainers on the Nifty Pharma Index today. Astral, meanwhile, reported very weak set of numbers. Revenues fell by about 2%. EBITDA margins contracted to come in at 13.6% versus 15.5% that the company reported same time last year. Hindalco, this one reported its standalone numbers during the day. Praj Industries, in fact, that one is also down 7%. Praj Industries numbers were weak. Management commentary was also cautious. In fact, they said that second quarter is also expected to be on the weaker side. So that one lost nearly 7% in trade. So all in all, it was a weak day on Dalal Street. Nifty is ending with a downtick of nearly 0.4% below that psychological mark of 24,500. But that's all the time we have on this edition of the show. More news and updates will continue on the other side.